So hello and welcome to the Data Explorers Market Update, where we are today finally talking about the subject of Japan. And we've had obviously lots of inquiries about this, but we just wanted to let the dust settle on this undeniable human tragedy that is unfolding out there, for which we feel rather it isn't our place to be jumping on the bandwagon and talking about investor opportunities around something like this at all. And also, that is reflected in the data because it's not the case there's suddenly massive amounts of short selling going on in Japan at all. It's a bit of a red herring, and we know from the academic research that it's long only managers selling their shares that causes, systemic falls in share prices as much as short sellers, in fact more so. That said, we can look at the couple of things which are not too sensitive, and let's concentrate on the sort of more longer term issue of what would happen to the price of uranium given all of the checks and reviews going into nuclear energy, given what's happened to this reactor. And unsurprisingly there, we see that the global X Uranium ETF has seen a big spike in demand to borrow. It's 5% borrowed, which is kind of most of what you can short. And if you look at lots of the uranium companies, whether it is Uranium Energy, Uranium Resources or Uranium Participation, all of these stocks have some recent spike in short interest. Uranium Energy and Uranium Resources are 15 and 7% of their shares short respectively, which is pretty high. Now some of this was building up before the reactor explosions because the uranium spot price kind of was coming down anyway, but those short sellers have got lucky because it's just gone down a hell of a lot more. Uranium One is really the biggest by market cap listed uranium company. But they have convertible bonds in issue, so you've got 9.5% of their shares short, but that is somewhat to do with hedging the convertible bonds in play. People are probably more interested generally in what's the impact upon the big liquid energy companies, the EDF, the RWE, etc. But the issue is that they are so diversified and so massive that we're not seeing any real movement in either the long or the short side of those companies. Even the URRE, which is a very big French company that's more of a sort of nuclear expert, no real change. And then the major mining companies, they obviously like Rio Tinto, they have stakes in uranium, but obviously they're so diversified that this one incident is unlikely to derail their short term. If we look at, say, Japan though, there's dividend season, which is sort of clouding the data a little bit in Japan because the borrowing is going up for reasons that have nothing to do with an increase in short selling. That said, the iShares MSCI Japan ETF has seen a big spike to borrow, and most of that is on loan right now. I think it's sort of like sub 10% of the shares in issue, but it's a huge amount of the supply, and that's not surprising as people hedging or looking to short through one instrument, a sort of broad basket of Japanese stocks opportunistically as their markets went down quite a lot this week. The FT today leads with, well, what does this mean for alternative energy? Other energies, so oil and natural gas companies clearly stand to benefit because if China and the UK slow down their conversion to nuclear power, that's good for natural gas and oil, sadly, I guess in some senses, given they're still natural resources. No real things we can see there, but an interesting footnote I'll leave you with is that what might happen to the carbon credit market. The FT pointed out that the carbon credit market could come into play as these companies need to essentially offset their carbon footprint, and we continue to rely upon the old industries, but we kind of tax them through the carbon credit process. There's an interesting little UK company called Camco, and their broker Peel Hunt basically tells us that they are worth half what they could be worth on a sum of the parts valuation. And institutional investors through our data have already started buying Camco, and we could probably see that rise even further. So that is all. If you'd like to read the report, you can find it in its usual place at dataexplorers.com/news.